Hello traders, so let's talk about our mean reversion strategy. We're going to look at the live performance of the strategy, and we're also going to look at the research behind the strategy, the edge that we got behind the strategy. And we're going to also look at the forex reports that I developed for this strategy. So we started trading this strategy on a $10,000 account. This was just a test on the demo account to see how the performance would be over a period of time. We're currently trading this on 4 symbols. So we have Euro CHF, we have Euro GBP, we have GBP CAD, and we also have GBP NZD. So we are trading this on these 4 pairs right now, and the trades look really amazing. I'm not going to lie, right? Although there's an issue on GBP NZD, and hopefully I'm going to talk about this at the end of the video. Okay, so we had a buy trade here, pretty good, but we had a mispricing here that occurred around 12 midnight. Right, we're going to talk about this at the end of the video. So first of all, let's visualize the mean reversion idea that we are going to be researching on. This idea requires 2 indicators. So we have the Bollinger Bands and the moving average. Now the idea is this: if the Bollinger Bands are above the moving average and the price closes below the lower Bollinger Band and is above the moving average, that is a point of reversion, right? That's the idea. Now in this case, we are using the moving average as the mean, okay, to identify the reversion points. Okay, so this is for a buy entry indication here, and a couple of things that you're going to be seeing in our research: the deviation price, right? And deviation price is simply the difference between the upper Bollinger Band and the lower Bollinger Band. Okay, so this is for a buy entry indication, and we also have a sell entry indication here, right? So the moving average and the Bollinger Bands. Now the Bollinger Bands are below the moving average, and the price closes above the upper Bollinger Band, but it's below the moving average. So we have a reversion point here, and we're expecting the price to go back to below the lower Bollinger Band, assuming that this is a downtrend and the price continues downwards. Now here's the thing: we don't know the Bollinger Band to use, we don't know the moving average period to use, we don't know the deviation, we don't know how long it's going to take for the price to move, we don't even know if the price moves at all. Hell, we don't even know if this condition or this idea works. So we are going to be researching this in depth in this video. Okay, so let's move on to our research report. So let's look at our research. Now this was done on Jupyter Notebook using the MetaTrader 5 library. The code here is Python, so it's very easy to understand, and I'm going to be explaining everything in detail that we did here. Okay, so the first thing we did was to initialize MetaTrader 5, and we downloaded data. The data we downloaded was from 2023 down to 2025. So this research is done between 2023 and 2025. And the next thing we did here was that we added the indicators we used in this research. So we have the Bollinger Band, all the Bollinger Bands here, and we are currently using a constant deviation of 1. Okay, and we also added the moving average here. So please ignore the other indicators that you see here. Okay, so we also got the Bollinger Band difference, which is the difference between the upper and the lower Bollinger Band. Now this would be a deviation price. Okay, so let's look at our entry indication here. Now the entry indication says where the close is lower than the lower Bollinger Band, and the previous close here was above the lower Bollinger Band, and the close is currently above the moving average. Okay, so we have an entry indication here, which is a buy entry indication, and we have the inverse for the sell entry indication. So the close is above the upper Bollinger Band, and the previous close was below the upper Bollinger Band, and the close is below the moving average. So we have the sell entry indication here. Okay, so going down here, we're looking at the difference, which is the difference between the upper and lower Bollinger Band, which is what I explained earlier. And the reason why we are doing this is because we could actually multiply that difference by a number to see how far the price goes after a certain amount of candles, which is why we are using this difference here. Okay, in this case, we are just using 1, which is we are using the actual difference between the upper and lower Bollinger Band, and which is what we set as a deviation price here. So the deviation price here is the close plus the difference. Okay, so the close plus that distance, right, is our deviation price, and the inverse deviation price is the close minus the difference, right? So the deviation price above, right, and the inverse deviation price below. Now, if any of the close price in a certain amount of candles is above or equal to the deviation price, we count that as a win. And if any, right, of the close price in a certain amount of candles is below the inverse deviation price, we count that as a loss. Okay, so we do this for buy, and we also do this for our sell entry indications here. And at the end of the day, we get the buy win probability, we get the buy loss probability, we get the sell win probability, we get the sell loss probability, we get the buy scenario count, and we get the sell scenario count. So we are going to be running this on all the forex pairs on our MT5. Okay, we're going to be getting the results now. Okay, so let's proceed here. And these are the symbols that we are going to be ignoring for our research, as these symbols are not tradable. Okay, or even if they are, the spreads are very high. Okay, and for the moving average, we are going to be using a range of 20 to 100, using a step of 10 for our Bollinger Band. And for the moving average, we are going to be using a range of 20 to 700, using a step of 50. Okay, and for the candle lengths, which we are looking at, we're going to look at a candle length of 10, candle length of 15, a candle length of 25, and a candle length of 50 for our research. Okay, all right, so we're just going to scroll down here until the end. So like I said, the daytime 2023 to 2025, which is our research done on, so we're researching for 2 years. Okay, so let's look at the results of our research. All right, you can see on Euro USD here, we have symbol Euro USD, we have the parameters. So the research is giving us the parameters. So we have the Bollinger Band average of 90 and the moving average period of 200, right? And it says for a candle length of 25, the buy count is 50, the sell count is 69, right? So we had 50 trades or 50 scenarios where that setup happened. And the buy win probability was 32%, and the buy loss probability was also 32% in this case, which is a buy win ratio of 1:1, right? This is not good for us, right? But you can look here, it says we had a sell win probability of 43%, right? Which means whenever that reversion occurred or that setup occurred, the probability of the price going down to touch the lower Bollinger Band is 43% in 25 candles, right? Out of 69 trades or 69 scenarios where that occurred. And the sell loss probability, which is probability of it going above the inverse deviation price, was 13%, which gives us a sell ratio of 3.33, right? And you can also see at a candle length of 50, right, we had a sell win probability of 71% and a sell loss probability of 30%. Now, this has given us an idea or an edge that we can actually use in our trading, because we're no longer just doing guesswork. We know that whenever this setup occurs, the probability of us hitting our take profits is 71%, and the probability of us hitting our stop loss is 30% over the last 2 years. Okay, so whenever this setup occurs. Now let's head over to our MT5 here and do a simple test of this trading strategy. So we're currently on our MT5 right now, and we are testing our mini reversion robots on Euro USD like we had in the reports from 2023 down to 2025 on the 1 hour time frame. and we're testing this using just open prices. So if we head over to our inputs, we are testing this using a moving average of 200 and a Bollinger Band of 90, TP level multiplier of 1, and a stop loss multiplier of also 1, a Bollinger Band deviation of 1, and a maximum trading duration of 25 bars. Now we are setting our trading bias to just sell trades, and we are setting our trading style to reversion, which in this case is what we are looking at here. So if you look at the report here, this is exactly what we have here. Okay, so let's head over to just test this out and see what it looks like. Okay, so we're done with our test, and this is what the graph looks like. Now, off the bat, this isn't bad, right? Remember, this is just the first report that we are seeing on Euro USD, and is actually pointing us in the right direction on how to trade Euro USD using mean reversion. So you can see what the individual trades look like here. Okay, so we know that when the price gets to this point, there's a certain probability that it goes downwards or upwards in about 25 bars. And after that 25 bars, if our trade is not closed either by hitting the stop loss or by hitting take profit, then we close the trade, because we cannot account for what happens after the 25 candles or the 50 candles over the past 2 years, according to our research. Okay, so let's head over back to our research here, and you can see you can also find some more interesting probabilities as well. Okay, and also we can also have a reversal probability in this case. So let me just see if I can find an interesting one here for you. Just going to scroll down. All right, so this is a very good example now. So on Euro GBP, using an average of 90 and a moving average of 650 over a candle length of 50, and for buy count scenarios of 91, we had a buy win probability of 21%, and we have a buy loss probability of 61%. This brings our buy win ratio to 0.36. Now what this signals here is actually a breakout, right? So on Euro GBP, a breakout using these indicators here would likely be more profitable than trading mean reversion. Okay, so that's why we added this here in our forex robot here in our inputs. So we have either reversion or breakout. Okay, so depending on which case here that works more for you, you can actually trade test that. Okay, so you can see now we are not making any assumptions, right? Using these reports, we understand what kind of strategy or what kind of trading style we should be trading on a particular symbol, right? We understand where to put our stop loss, we know where to put our take profit, we know the exact averages to use, and we also know the probabilities of the trade going either in our direction or heading to a loss. Okay, and you can scroll through all of these pairs here and look for some of the best. Okay, taking all this into account here, you can have a basket of trading strategies. For example, you can see I have 1, 2, 3, 4, right? And I know exactly the kind of trading style to trade in each of these symbols. I know the exact indicators to use. I know the exact stop loss and take profit, and I know exactly when to close these trades. And as you can see from the trades that we have here, for example, this is on Euro CHF, and we actually have a current trade right now. So this is Euro CHF, right? And this was a sell trade, and you can see instantly here it reversed, and it's also reversing here. Okay, so same thing here, and this was actually loss. So we don't have to win all the time, but we know that, okay, whenever a trade is placed, there is an X probability that it's going to hit our take profit, even though the stop loss or the take profit ratio is at 1:1. You can see what our history looks like here. So we have very good trades here and very good profitable trades, other than the issue on GBP NZD. Now let's take a look at GBP NZD here. As you can see, our forex robot is actually picking up good points of reversion. For example, this is a point of reversion, this is another point of reversion, the price went up, and this is another point of reversion. And if I should head over, back, let me see if I can take this out here and head over backwards here. You can see this was also another point of reversion. This is also another point of reversion here. So we had a trade here, and the price actually went in our direction. But in this case here, And also in this case here, right, our stop loss was hit. And our stop loss was hit not because the price came down, but because of the midnight spreads on GBP NZD. If you notice, you're going to see long candles here. So this is 1, this is 2, this is 3, right, this is 4, this is 5. You can see all of these long candles here, and this actually happens during the midnight crossover. Okay, you can see this long candle here. It actually happens due to mispricing. So the spreads are very large, and a lot of times stop loss ends up getting hit, right? So to prevent this, I'm going to be modifying the main version forex robot to remove the stop loss during the midnight section, right? So that this doesn't happen, because this is just mispricing. By 1 a.m. in the morning, the price goes back up and it continues from where it stopped here. Okay, overall on our trades here, from our research reports, we haven't actually made any loss on GBP NZD. So this was a profit. Hopefully this would be a profit or a loss, we don't know for now, but for our concluded trade, this was a profit, this was a profit, and this was also a profit here. For our research, right, we are using open prices rather than ticks, and all of these things here are currently ticks. They are all going to count as profit, and if all of that was done here, would have probably just made about 2 losses so far, and the rest would have been all profits. And you can see how amazing, or should I say crazy, this trading strategy is. So here's what you could do if you're going to be using this strategy. Now I've added the set files and the symbols I'm currently trading here on Trading Kernel Stack here, right? This is free. I'm not charging you guys anything. You can head over to Trading Kernel Stack, sign up, create an account, and download this forex robot along with the set files and set them up just the way I've set them up right now on GBP CAD, Euro GBP, Euro CHF, and GBP NZD. But the thing is this, right, and I've said this earlier, this would not last forever. The idea is this: once every month I would be running these reports, and I'm going to be finding better results than what I have here. So if I have a better result on a better symbol, I'll hopefully add that here and take out a symbol that is not performing well. Okay, so just like how the Nasdaq is done or the XPX 500 is done monthly, you're going to be taking out forex robots that are not performing well and putting in forex robots that are excellent or that has been excellent on the reports. All you just have to do is to install Anaconda here and run Jupyter Notebook, and then you install all these dependencies here. Once you have all of this installed and you have your MT5 path here, that's all you need. That's literally all you need. You can run these files here and you can get all of these reports here. Okay, it's very easy. The reports are in English, so you can obviously read these reports. I purposefully had to wait until we had another trade so you guys can see that this was no sort of manual trade or test. Okay, these are all automated. All of these are automated. Okay, so guys, if you have any questions, feel free to reach out to us or Trading Kernel support, or in this case you can actually reach out to me on Trading Kernel Stack here. Okay, you can reach out to me, message me here, or you can actually, you know, post something if you have report here that works very well or that's been working very well for you. You can actually share that to us here. Okay, you can get probabilities of, you know, 5.0, 4.0, or in this case here we have 57 and 19, right? So you can actually use that and test that, and if it works out well for you, please update us on Trading Kernel Stack here so that we can use, you know, this along with you. All right guys, I will see you in the next video. Bye for now.